welcome everyone. Welcome back to the 5ers Live Trading Room. We are live once again. It's Wednesday. Hope you guys in the comments are making a... I was going to curse. Sorry, I'm not supposed to be cursing. Hope you're making a lot of money, guys. Hope you're making a lot of money. Gold is absolutely pumping. And I just got stopped out. I got stopped out right before the move. So, yeah, we'll talk about that later. What?
You were long, yeah?
I went long, yeah.
Good.
I got a wick, taking out my stop loss, gold being gold, took out my stop, and then you started running right towards my take profit. Guys, we got an exciting session here for you guys today. We have Anastasiia back in the background. She's a funded trader with the 5ers. She got a high stakes 150K account, started with 100K, which means she has scaled this account twice with multiple payouts. It's going to be very interesting to have her on, talk about her trading, maybe show you guys a little bit, tips and tricks to perhaps help you guys in your trading as well. Alex, what if we replace you with her?
Oh, that would be so much better, wouldn't it? I bet you would love that. So go on, you can take me out and we'll replace. I'll be back on those soon. We'll talk about obviously our trades in gold and also the USD CHF trade that we had on the other day as well, which Tom OTE trader is in here. Tom in the building, everyone. So everybody say hello.
Nice. What's up, Tom? What's up? Yes.
All right. Bye.
Welcome. How's it going?
Thank you so much. Yeah, amazing. Thank you so much for having me today here. I'm excited.
Thanks for being here. Victor, you're all quiet. You haven't said a single word since we started. Say hello.
I was looking
to the guest.
I was looking for the best moment to say that. Welcome everyone. Let's get starting. Welcome, Anastasiia. How are you doing today?
I'm good, thank you, Victor. It's really nice to meet all of you today live as well. It's different when you talk on the email, when you actually get to speak to
definitely.
people.
Yeah, this is going to be very exciting. Maybe maybe you could start by telling us a little bit about how you got into trading. How has your trading journey looked like? When did you start? And all of that fun stuff. And then after that, maybe we can go into maybe the details of how you're actually trading and how you got to scale that account twice.
Yeah. So I started 8 years ago. I'm 26 now, so it's been quite a journey, as per everyone, and I started, I guess, like most of people, because trading was attractive for me in its sense of freedom and money, obviously, like everyone, I guess, starts because you see the potential of earning unlimited amount of money with trading. So obviously it didn't go as smooth as I wanted it to be in the beginning. But it did pay off, I started with crypto, and it was 2016, 17. And, it was before the big first boom on crypto, when not a lot of people actually knew what Bitcoin is and trading is. So it was fascinating, and it was less fascinating to see how it all collapsed a year later. And year and a half.
That was fun.
That's when I realized, all right, I need something more stable than cryptocurrencies. So I actually don't trade crypto at all anymore for the past years. I switched to get spot buying, and that's about it. But I trade mainly futures, futures on euro, pound now, and oil. And I went from the journey. I guess I tried everything that you can imagine, all the indicators, all the patterns like triangle, flags, and all of this kind of things. I traded binary options even, even my journey led me to binary options. Crypto, scalping, swing trading, everything that I could imagine. I've been trading indices for quite a while, but then the economy switched and we got the new president in US, and I switched to the different assets because the market changed a little bit. And so for the past 2 years, I've been trading 2.5. I've been trading only EU, GU, and oil.
All right. Okay, let's start with crypto. You said you started trading crypto in 2016, 17. So let me ask you this: Did you sell the top in 17, Or did you do like me? Just you hodl through the crash.
I hold it through the crash.
Yeah. All right. So
Yeah.
you got those diamond hands. Did you sell at the bottom, or did you actually hold it through the rest of the?
But I didn't hold it through to get my money back at that point. No, with crypto, actually, it's completely opposite than with trading. With crypto, I can be used as an opposite signal, because if I say buy, it's gonna go sell. So I don't touch crypto anymore because it just doesn't work for me.
Yeah, same here. When it comes to trading, I think crypto is and I see Alex here in the background. I know he's looking at altcoins and everything. When it comes to crypto, we at least from my point of view, I look at Bitcoin as a long-term investment. An investor in Bitcoin, but not very interested in trading it. So you talked about options and Forex and trading commodities. So obviously you tried many different things. What is your main market today? Is it Forex or something else?
It's futures, but since I trade EU and GU futures, GBP and Euro futures, I also do trade Forex, so Euro USD, GBP USD. And that's how I trade on the 5 as well.
Right. So you're basically copying over the you're looking at the futures market and you're just copying over that into the into the 5ers account pretty much.
Yeah, exactly.
Right. It's very, very interesting. So I guess when it comes to trading futures on those pairs, it's not really a huge difference, would you say, technically?
No, it's actually not at all. It's quite interesting because, well, I guess we're gonna get into it, but I do trade volumes, so that's why I analyze it on the futures market, because you can actually see volumes and order flow and all the kind of orders there, which you can't get access to in the Forex. It's gonna get used to it's a price difference, so I need to recalculate the price, but I also got used to it during some time already, so it's much more comfortable for me now.
I got so many questions. I can't sit in the back, talking about crypto. Now we're talking about order flow on futures and all this stuff. So I can't just sit in the back. It's too boring. It's super interesting because the reason why obviously you came on here is because we spoke. We pulled you in. Obviously, I wanted to understand you a little bit better. It's no shock at the moment. The majority of the traders that I speak to are male, and it's quite a new thing to obviously have such a great trader that is female. So we obviously wanted to bring you in to communicate and just talk about the way that you go through the markets. But when you're looking through order flow and stuff, why did you kind of go over to that side of trading? What makes it about looking into volume and footprint charts and things like that instead of just normal candles on CFD charts? What can you talk about that?
Yeah, sure. So I'm actually very curious about trading in general, so I've started to ask myself question since the beginning. I started learning is why does this stuff work? Why is what am I learning now supposed to work? Meaning, why is the price supposed to reverse there? So what is that pushing the price in that direction? And that's why I went a little bit away from all the patterns and the typical technical analysis, because it didn't answer my question why. So I guess I'm all for all kind of different strategies. I mean, everything can work if you know how to utilize it, and if someone has a right mindset, even just like the simple things can actually work. But it didn't answer my question and decided to know what's standing behind the market. And then I got to know one of my mentors, and he was doing the order flow. So thanks to him, I went into this path and I continued to learn it, because this actually answers me, who is behind the market, who is moving the market at this moment, why does it reverse there or here? And all indicators, like majority of the indicators for me personally, is like a kind of, derivative from the price. So people take the price and mathematically recalculate it, and they put out the indicator. Whether it's volume and order flow, it's actually the price. So it's actually what the price is. So that's the difference for me, and that's why I went, into that path more.
So when you're looking at your basic trade setup, obviously we'll go and pull up the charts in a quick minute. But what do you like to see? Do you like to see trap traders? Do you like to see loads of traders coming in on a move, loads of momentum? Like, what is your kind of bread and butter setup when you're looking to get into a trade?
I have different setups, but one of the most used for me personally is a range setup, consolidation.
Nice.
So after the big volume accumulation, the price coming back to that exact, area back, and trading from the point of control of it. I do get sometimes the confirmations also on the footprint itself. So clusters, and then this is the combination of two is pretty much the most oftenly used for me.
Yeah.
In general. Yeah.
So let's pull up some charts.
Like I said, this is some advanced stuff. I'm feeling a bit dumb. I'm like, yeah, all right, could be interested to see.
I had to bring her in here just to show us up. There's us talking about little support and resistance and EMAs. We're talking about order blocks, volume, and things.
Footprints. We definitely need some, to switch it up here from our boring break and retest every live stream.
I mean, if it works, it works. Sorry, Victor.
Yeah, of course. Do you have anything, like, do you have any charts, anything you want to you can share your screen and maybe show something? That's Victor right there.
That's Victor's chart. We'll obviously just pull up Victor's, and Anastasiia can pull up her chart and share it, and we'll go through some stuff.
I'm not sure if you've said anything about that, but would you consider yourself a swing trader or day trader, scalper? I think most future traders,
intraday if you're looking at
intraday, actually, most intraday. I tried swing, but it's with currencies, I don't know. I got myself into intraday more. I find myself there better. So.
Yeah.
Sometimes
Definitely.
It now even leads into scalping a little bit. If we get on the 5 minute, for example, especially in the market this week, where it doesn't actually move at all. That's where 5 minute setups come in. But in general, more intraday.
Fantastic. When you're ready, just
guys,
pop up your chart and we'll put it on the screen. If anybody's got any questions as well, guys, we're gonna have lots of questions, and make sure you put them in the chat, and then we'll pull them up for Anastasiia to go over.
Just a moment. Yeah.
And guys, you can make sure that you follow Anastasiia. You got the links to her socials in the description of this video. And you also had something you want to share with a possible giveaway with your Telegram channel. Maybe you can tell them a little bit about that, to give them a really good reason to actually get into the Telegram and see what you got in there.
Yeah, definitely. Well, first of all, thanks for sharing it. And I started my Telegram channel like literally just 3 weeks ago, because I've been, also on the side of teaching and mentoring some students, and now I've got into a Telegram where I share just the market breakdowns, different kind of things, some psychology about trading. And I'm really into this, and I would love to share with people some experience that I've got, so maybe it can help them along the way, and they can actually do it faster than me, within their trading career. So on my channel, it's not a lot of people now, but every single target that we hit, I'm going to be doing giveaways. So when we hit 250 people on their Telegram channel subscribers, I'm going to make a giveaway for the 5%ers trading account for the 50K. The same is going to happen when we're going to hit 500 people on the account, and then 750 and 1,000 people. I'm going to do a 100K giveaway on the 5%ers. So yeah.
All right, so we almost have we have almost 200 people watching this right now. So if you all go to the link, you go to the Telegram, there's a big chance that very soon you'll be in a giveaway to get a 250K account with the 5ers on that giveaway. So make sure that you go to the links and click them. All right, let's take a look at this.
Yeah, for some reason there is a gap. So I use volumes and TPOs in general on 30-minute time frame. So always do the overview through the weekend on daily time frame and all of this to be able to identify the overall trend for the week, what I'm looking for, and if there is even a trend. And then on daily basis, I actually do the 30-minute analysis always, using their all kind of volume tools, starting with TPO, so time price opportunities, which is this one, and the volume profile, which is a white one. Now, I'm gonna perhaps bring it on the bigger scale as well to be able to show what is this.
Which platform are you using for your level 2 data?
Yeah, that's Atas.
Atas. Yeah.
Yeah.
Nice.
That's Atas. So I do use TPO and the volume profile to be able to identify the big volume accumulation areas. Most of them are always inside of the big consolidation. So this is also why the most common setup for me is a consolidation kind of setup. So let's say they have their consolidation right here. So the current market, I'm gonna delete everything that we've got here now. So let's say we have this consolidation here being formed for quite a while already. I guess we're gonna stay close to it until the CPI tomorrow and PPI. So I don't think we're gonna go far from it. But let's say that now this volume area, which is in the middle, is interesting for me to see the price reversal to the downside. Let me quickly reload it. So maybe the gap is gonna disappear. I think they have some kind of lag now. Very unfortunate. Yeah, so this should be a candle, in fact. But if I place my volume profile over all of this move, we're gonna find out that the biggest volume was trading in the 28.16. This is GBP USD, kind of similar to it. So this is pound futures. So this is the biggest volume area, and I have this one as well. So this is where the biggest volume was traded or during the past consolidation formation. So it's been already a week almost at this point. So what volume means for me is that this is where the most orders were placed. And now I come out of the belief that big market participants actually always are on the positive side, meaning that they are essentially winning, because I'm not gonna get into it. I'm gonna sound really crazy, but high frequency trading and all of this stuff, they actually do win. So retail traders, majority of them are gonna commonly lose. So if the price stayed here inside of the accumulations, it's consolidating for a while, and people were trading there, so volume was accumulating, and then the price moved down, I come out of the belief that big market participants actually moved it down. So the price returns back to the point, they're gonna protect their own big orders, and they are not gonna likely allow the price to easily go through it and break through it and go up. So I trade from this volume of consolidation. So for example, now GU, I'm looking for rather the downside move from approximately where we are now. And as an extra confirmation, I can use footprint. Do you want me to show it on the screen?
Yeah, you can definitely pull up. I haven't looked at a footprint chart in a long time, but yeah, definitely pull up a footprint chart, and because not a lot of people use footprints. Some people don't know, obviously they understand imbalances and things like that, but also seeing it in a candle is something probably new to a lot of people as well.
Yeah, so footprint is, what maybe, some people on live don't know. Footprint is just what is happening inside of that candle. So all buy and sell orders, all take profits, stop losses, everything is reflected on the footprint chart. So all, here on the numbers that we have inside are essentially bid on the left side and asks on the right side. So we have sell orders and buy orders on the right side. So on the footprint, I also have some filters that are showing me that big disbalances between buyers and sellers, for example. So this circle here and the bright red rectangle cluster is showing me that there was a huge disbalance between bid and ask. So if it's red, it means a disbalance bid on the side of sellers. So we have 100 more sellers, so bid orders in this cluster than buyers. So in this case, I'm already in the trade for GU. But let's say that, because I got in before this cluster, but for the current moment, what I could wait for is the price closing below this cluster, because it's also the big amount of order. It's meaning that these sellers actually did push the price down. And then on their comeback to their previous level here, I would be able to sell it down. So it would be at this point on to the downside. So that's one of the setups that I trade.
What would invalidate that for you? Because obviously you've got a big cluster of sell orders right there, and now price is still moving up. Obviously it's consolidating under that point of control. What would invalidate that for you? Because a lot of those sellers now are offside, not a lot, but they're still offside, and maybe they're maybe feeling a little bit of a pinch. If it starts moving up above the point of control, then obviously they may want to close those orders that pushes the price further up. So for you, what do you do if you start to see, what are you looking at to get out of that position if you feel like it's wrong?
So I always have my stop loss placed in the first place. So my stop loss is based on two things. It's based on backtesting. So the appropriate size of backtesting, the size of stop loss is backtested for each asset that I trade. So I know that from my entry point that I usually take, for example, for pound futures, so for euro futures, I take 30-35 tick stop loss. So it's 60 to 70 tick profit. So 1 to 2 I trade usually during the day. So until it reaches 30, I'm likely not gonna close it, because based on my backtest, it's just data, right? It's just mathematics. So based on my backtesting, it can come until 30 and then reverse back in my direction. But secondly, it is based on the volume. So for example, if I will see the price going out of this big volume area, so this is the last big volume node. So this is where the last, this is also where the price was rejecting here for me. But this is why the price was holding here. So if it's going to start closing above it, I'm not going to likely get out manually if it didn't hit the stop loss by that time, because I will know that the price breaks through my volume, which means that it's likely invalidated. So it filled all the orders that were standing there. So it's likely not going to reject this volume anymore.
Okay, nice.
Or on the footprint also, if I will get activity of the buyers, active one. So if I will start having, this is the red one that I have, but if I'm going to start having the bright green ones, green clusters, which is a disbalance on the buyer side, so we're going to have lots of asks and candles are actually going to be bullish, then I'm also likely get out manually, because that's the buyers pushing the price actively. And that's not what I want for my trade, because I'm looking in the opposite direction. So I'm likely get out, and then if I get another confirmation, can get back in my sell if the trader will still be valid, and gets me extra confirmation that the price is actually reversing.
This is quite a lot of steps and obviously things that you're looking at. You've got obviously technical patterns, what is going on, just a normal level 1 chart, candlesticks, and then you've got everything obviously going into footprint charts and volume profile and all of that stuff. So what kind of comes first for you? You're obviously looking at first obviously what it's doing on a technical chart, and then going into the level 2 data to see to confirm, or you kind of looking and seeing how many buyers are coming in at a level, and then looking if there's any technical stuff to back you up afterwards?
No, not really. Footprint is just the last step.
Okay, nice.
So I do mainly trade on the volume, based on the volume. So if the price is comes back in the volume area, I'm likely to take a trade. Footprint can be the confirmation for me if I'm not confident in the setup 100% and I want something extra. It is a confirmation for me to get out. It can be the confirmation for me to add to the winning trades if the price is running, and then I see some, sellers, for example, in this case, hitting the market, and the price comes back to the seller point, I can add to the winning position again. later on, but that's about it. So mainly my whole analysis is based 30-minute time frame and volumes. So all the lines that are on my charts are just volumes, different visualization of it.
Besides,
I've been trying to ask a few questions, but apparently I have my mic muted, so that's why I thought you were ignoring me, but I used to have my mic muted. I'm like, why can't I speak? So I've tried to replicate your analysis here on TradingView, and I like that. So we broke below the range, right? We broke below the range, and what's happening?
Just a moment, I'm gonna share screen.
All right. So
there we go.
What I saw that the range, broke to the downside, and you're then looking to go short when price is retesting that point of control, which is basically also in this case the middle of the range. Is that your type of setup where you first want to see a range break, right? So
yeah.
Okay, so first the range is breaking, and then you look to execute your trades on the when price is coming back into the middle of the range or the point of control with the volume profile tool.
Yeah. So this is TradingView. So this is a version without footprint. So that they also have the volume profiles and TPOs and everything. So here I do wait for the breakout of this, specifically this range at this moment. So we did break out to the downside, which means that this range was mainly big seller accumulation, otherwise they wouldn't let the price go down. And now this is where I'm looking for a sell because of the point of control of this consolidation. So, and then footprint is just extra confirmation if I want it, but for the rest, this is it now.
I can see that you're obviously using VWAP as well. Is that just to confirm where price is, or do you have like a strategy that uses the VWAP?
You mean the lines?
Well? Yeah. So is that a VWAP on there as well, or is that something else?
No, that's not a VWAP. That's actually volumes on the PVP. So TradingView has the PVP indicator. It's a periodic volume profile. So it built a volume profile over a certain period of time. So this would how it would look on it, for example, weekly. So that's a current week. But I just turned off the volume profile, otherwise it gets too much on my charts, and I like my charts clean. And I only left point of control. So the blue line, the bold blue line is a point of control. And the thin blue line right here, which is moving, is a developing point of control. It shows me the trend, which is a really cool thing. So the developing point of control stays below the price if the price is in their uptrend, and it plays a role of support. And it switches back above the price if the price is ready to switch to the downtrend, and it stays at that moment above the price. So, for example, here.
And you're using the fixed range volume profile, right? In TradingView.
Yeah, fixed range volume profile.
And do you have any specific rules on which low and which high you're using? Because I put it on my TradingView here, like you had, but I'm not really sure why it's that range and not a lower anchor.
Yeah, so I do use. Just a moment. Where is it? Here. Yeah.
Oh, go ahead.
So yeah, I do use it in two setups. So I'm going to show two setups. So first of all, I can find the point of control of their impulse of the last impulsive move. So the last move for me is here to the downside. So I can just take the highest point and the lowest point of the whole downside move and place my volume profile over it. And then that's going to be the point of control of the whole move. So that's where the biggest volume over this whole move to the downside was traded. So that's this. It's going to be 28,073 GU. Or that's a setup for the point of control of the impulse. Or I can take the range. So range for me is everything, because people have different definitions of the range. For me personally, the range is everything where the price just goes flat. So it doesn't, and it consolidates around the same volume line. So it just goes above and beyond the like a volume line. And then I take the middle of it, so the beginning where the price was creating the first low of the range. So it's this one. And until the candle which breaks out of the range. So this or this, it's not going to make a difference because the point of control is going to stay the same. So if I place it here, that's where my point of control will be. So again, I just take the first candle on the bottom. So the first candle which creates the support of the range, and then until the last candle which breaks out of the range, which in this case is those two candles. So that's already not included in my range.
Great stuff.
So just click here. Yeah, and then this is the volume. The orange is also the PVP indicator, but just on the monthly time frame. So the blue one is weekly. The orange one is monthly. So that's the monthly biggest volume point of control. That's the weekly biggest volume point of control, and that's a developing point of control for months and a week.
Very nice. Good question that I asked Tom when he came on, the OTE trader, is if you had only one trader setup that you can take for the rest of your life, is your bread and butter setup, what setup would that be? Would it be this one, or have you got something else that you like to use more?
It would be this one.
Wow. Okay. Interesting.
And there is a little adjustment. Like it's a little more complicated. There is a little more complicated version of this.
Yep.
I don't know if I will find it now. Let me just draw it out, and then maybe I'll be able to find it. So exactly the range, but within the head and shoulders pattern. So the price consolidates, and we have this consolidation. So the range gets accumulated, and then it exits to the upside, for example, and then it breaks the range. So it is kind of the left shoulder of the range, but it's also the point of control of consolidation, which is in the middle, usually. So my zone of taking a sell will be here. And when the price comes, I'm taking this sell. So this is a more complicated version of the same one, but it actually works so good. So if bread and butter, I think that I would take this one, actually.
Yeah, I think that's a really good structure. You get that fake out to the upside, and then a retest for that continuation to the downside. I think that makes
a lot of sense.
That's a really nice, nice price action structure. Yeah, very, very familiar. I think you can. A lot of different traders, a lot of different trading styles would say that. Yeah, this is a trade for me. But what I'm curious to know if you have any I'm not sure if you've talked about this already, but do you have any specific entry triggers? So for me, for example, if I would be trading, I would probably be able to take a trade with the setup that you showed here in the beginning. So let's, I'm looking at GBP USD right now. Let's say on the 1 hour, and on the 1 hour we have a nice, maybe a pin bar candle, a mix between a pin bar and a engulfing candle. Like that would be an entry trigger for me. I would enter on the close of that candle with stop loss above the wicks or higher. So do you have any type of entry trigger like that when you decide to execute your trade?
I'm very simple in this. I trade with limit orders. So I place buy limit, sell limit. So I don't really wait for the entry trigger. So if this, for example, this kind of setup would happen, and my sell limit would be just 1 pip below it, below the point of control, and that would be it.
Okay, so you basically just want to see the level get hit, and when price hits that level, you start looking at taking a trade.
Yeah, exactly. Okay. So
you don't need any confirmation. You go in blind. Is that correct?
I seriously don't take any confirmation in the account unless it's, for example, news. So if the news hit, then I'm gonna wait for the 5-minute confirmation. So I'm gonna wait for the 5 minute. The same exact setup can be, for example, 1 minute accumulation, then exit, and then the point of control of the 5 minutes. So now, let's say, for example, here is the range, which is, it's trying to reject the point of control, but it's kind of failing it a little bit. So the better option for me would be waiting also until we get out of this range and then taking the trade when it hits back. These zones. Nice. So I would wait for exactly the same setup, but just on the 5 minutes.
And that's because obviously you see the high impact news events being an added risk here, and you want to make sure that price is not, just going in the completely opposite direction based on the news.
Yeah,
right?
yeah. I don't want it to activate my limit order and just smash my stop loss.
So when you say that you use limit orders, you put a stop limit below price. So if price goes lower, you're automatically going to enter the trade, right?
Sell limit, buy limit. So I'm going to wait until it exits, and then I'm going to place a sell limit with a reasonable stop loss.
Okay.
Like this.
Beautiful. That's that's really solid. I actually think this is really solid.
Didn't I tell you? Anastasiia, it was really funny because I came off the call with you, and straight away I was like, "Yeah, I'm gonna have to bring it to the trading room," And then these guys are like, I told them all as how good, just by understanding your methods, just by a couple of minutes speaking to you, I already knew that you actually understood what was going on, and you're not just any kind of fake trader or anything like that. You're really methodical the way that you look at things. You've got clear processes, and I think these guys also can see it as well. How can a trader that is now coming into trading, when they are bombarded all the time with so much fluff and many different things, how do they get to the stage where they're getting towards a little bit like you? They've got a method, they're confident with the method, and what would you say to them if you got some advice for them?
Yeah, well, first of all, thank you very much. It's really amazing to hear, because our conversation with you were like 5 minutes. So it really means a lot to me what you said. Okay. So about the trade,
No, you can remember we have a lot of traders on here, and they show, when they show an advanced system, they show a very advanced system. And I'm gonna be honest with you, a lot of the people come on here and they show an advanced system. I don't really get it. I don't get what it's talking about. But this is very clear. This is very structured. And I think, for me, something that's very important for me in trading, especially technical analysis, is simplicity. And I think what you've done here is you've managed to take some of the most advanced stuff that is in trading, especially footprint part, combining futures with Forex and using volume profile, and then actually showing how it can be traded in a very straightforward way. And I think that's very difficult to do. And I'm watching the comments here as well, and it seems that everyone watching here is just blown away by the efficiency of what you're showing right here. So
obviously, some people are telling us to talk about the May indicator, but that's a secret that only we're not gonna talk about the May indicator just yet. That's a secret that we'll let out the bag later on. But anyway, Anastasiia, how do they start building up that playbook? How do they start getting to the level where they're as confident as like you are with your setups? If it's in Forex, if it's in futures, all of this different stuff.
Honestly, it was quite a long journey for me. So I know now that I could have shortened it, because it took me a good couple of years until I became profitable, in the sense that I started to earn, money, at least somehow consistently, you can say that.
Yeah.
So in the first place, what I would do if I would go back to shorten my process is actually backtesting. Like I repeated so many times for everyone who asks, because backtesting can actually save so much time, because you immediately know if the system is actually profitable or not. Does it make sense or not? I always say that backtesting, so going back in the history and testing exactly your entry points and exit points throughout the past 6 months, for example, can save years. Because the backtested to backtest 6 months, we only need, a week. If someone spends, let's say, 2 hours per day, 1 hour per day, they can do it in a week. So in 1 week, they get 6 months of experience on one asset. If someone doesn't do it, they will go through exactly the same process, but on the live chart and on the live account, losing money. So they're gonna get also 6 months of experience, but after actually 6 months of trading, losing money, and they're likely not even analyze it so deep anyway, because not a lot of traders, despite we all know this, we all know that we need to analyze it. our trades that we took, what we can do better, what was good in them. Not a lot of actually do this because it's boring stuff. No one wants to do boring stuff. Everyone wants to have fun and click the open trade button. Because that's more fun than actually going and boringly backtesting the historical data, which is not gonna give immediate results like financially. So I honestly think that any strategy can work, but to be able to make sure that it works, we need to go and backtest it. And also what I did wrong when I started is I chose too many assets. Because I think like also a lot of traders and me included in the beginning, we think that the more we trade, the more we're gonna earn. And that's the opposite. Sometimes, and most of the times in trading, the less is more. So I would choose 1 to 3 max assets to stick with, because it's actually more than enough to make money consistently. And it's like relationship. I already give this example on the different call, but it's like relationship. If someone keeps jumping from one relationship to another relationship, they never get to know the person. And it's like they never get to know their, they never get to like build a deep connection, for example. They never get to know their habits and the reach with another person. It's exactly the same as trading. We can jump in from one asset to another asset, from another asset to another asset. We never actually learn the volatility, when it moves, how much it moves. What is the stop loss that we need to use? What is the entry trigger for this specific asset? Because all of them are different. And if we stick to 1 to 3, it actually brings much more results and profits, because we actually get to know things so good that I can delete all these indicators with volume now, and I will still know where the volume is. And I think you all as well, you can trade without, anything on the chart after so many years of experience, because it just visually, it's like a visual memory that activates, but it can only happen if we actually go and, focus on just a couple of things, not all of them in the market. So
you said quite a few different things. A couple of things that pointed out to me is obviously, even myself, I've seen going from asset to asset, trading, trying to trade Bitcoin like I'll trade EU, and just getting absolutely done. It's I think something that everybody can take a little bit from, but you've obviously gone through moments of boom and bust, and then you've come through and got to the other end. So what kind of held you in there? Because a lot of people, they go through strategy hopping all the time, and then eventually they turn around, they've lost a lot of money, and then they don't come back to trading. So why was it different for you?
You mean why did I stick with trading?
Why did you keep going? Because obviously you've been trading for quite a long time. You've probably been boom and bust, making a lot of money and then losing money, and then you've come to break even to now profitable. You must have had something during that process to keep you going with trading. And I think there's people here that definitely are on the first part of that journey. So I'm just trying to figure out what kept you going so it could help them as well.
I'm really stubborn. So I guess that plays.
That's good.
That's a very good answer.
Yeah, it sounds like a lot of us in here, actually.
Yeah. Yeah.
So, I guess traders who make it are really stubborn in the first place, because we are like, okay, I already spent all this time and money. Now I'm gonna make it work, no matter how much time it's gonna take me, But secondly, for me, I think that if you already spent all this money and time, it's worth to keep going, because you already get the knowledge that 90% of people around the world will never get, because they didn't even start, they didn't even make the choice, so they didn't have even their, the strengths or their, just like craziness enough, I guess, to get started in trading. And if someone is already here, they already know the basics, they already know more than most of people around the world. And, I have their quote in my hand. It's actually really funny. That's when I started trading. It says, pain is temporary, but giving up is forever. So that's trading. This is trading as well, like this, right? I can give it out. I can give up. For example, I could give up after 2 years of, constantly losing money. But where am I going to be in 10 years? I didn't find the alternative to trading. It's okay, I can go do the business, but we always depend on other people in business, because it's clients, it's all the other different things. I didn't find the alternative where I can be fully responsible for my own results, and the growth is actually unlimited. Wherever I am, whatever I do, it's only me who limits myself. So for me, it was easier, I guess, to work on myself than to work with other people and, within the other business. I found trading. I saw that it gives a lot of potential, and I was like, okay, I'm gonna stick with it, even if I sometimes feel like throwing my laptop out of the window.
What kind of blind spots did you have then for yourself? Because obviously we've all got blind spots. I know some of Jonathan's blind spots. He knows some of my blind spots.
Thank you. Yeah, exactly. I know some of yours as well.
Yeah, I know you know some of mine. We've all got biases and things like that. What kind of the blind spots that you overcome, and how did you overcome them?
Greed. I mean, emotional. I think emotional part, I guess, was the biggest one. Because you need to learn how to actually get the conversation with one of my students, colleagues, friends already at this moment, who in the past year also grew his capital from 0 to 900K after the conversation. Like we need to learn how to be satisfied with the result that we get. And that's how, I guess, to eliminate the greed. I've learned how to be satisfied with the result that I get, and I learned how to start withdrawing money, because my blind spot, the biggest one, was that I tried to squeeze everything out of the trading account that I've got, and it always played out against me. Because in the end of the day, market has its limits, every move has its limits, and it's gonna end somewhere. And then it starts, all right, I was 2K in profit, now I'm 1K, I'm gonna just wait until it comes back to 2K and close it, and it never does, it never does go back there.
Story of my life, yeah.
So you know how it is, and I've been there, and I've been there as well, and I started to trading like a business. I was like, okay, I gotta start withdrawing something to actually feel the result of what I'm doing. And that's where the greed also went away, because I was like, okay, I can actually feel the result of what I'm doing, and I can feel less pressure, I can feel calmer. And actually, this is where the things started to go much, much better for me as well.
That was one of the biggest problems I actually had with crypto, because I was always holding and I would never sell. And then I would add, and greed, once you see, price pushing up so much and you're up so much, then when it comes down, your mind is attached to that top of that equity, that top of that P&L, and it is super hard. But I agree, once you start getting into the habit of actually closing, making profits, I'm talking more on long position trades, not necessarily day trades, but more that you actually take profits and you do withdraw. There is something to what you're saying, where because it's actually tangible now, you actually connected with real things, and that is a big help. That is a super big tip right there, to actually take profits, withdraw, things like that.
Yeah,
that is super good.
I've just realized at a certain moment that I'm spending so much time on this. I'm spending countless hours every single day, and then I calculated. That's gonna sound crazy, but I've calculated if I would go to work, how much money I would make in the end of the year. And I didn't even make this when I was trading the first couple of years. I was actually losing. So I was actually better going off and work than sitting and spending my time on the charts. And I was like, okay, I got to start treating it like a business. It's got to start paying me off something. So I need to change it, because otherwise I'm just spending my time and money. And if I would actually, it's a different example. Let's say you would open their business, actual business, and it only gives you stress, anxiety, and it's up your money every single day. Someone would probably one would probably close this business, because they would be like, what's the point of that, But for some reason we are blind to this in the trading, and I was blind to this as well. And actually, when I sat down and calculated, I was like, okay, I gotta change it. And like you said, Alex, it became tangible, and then I was calmer that, okay, I can actually make it now. I feel that I made it once, I can do it again and again and again. And it became much better with the grid, and constantly wanted to squeeze the last beep out of the move that market makes.
I actually opened a short on GU based on your analysis.
Oh, signal serviced.
So there's the best type of
trades. That's what we call them.
The best type of confluence is, in my opinion, is where you have trader confluence between different trading styles. When you have two different types of traders, two different trading styles that look at the same area. And so I'm in a short here because your point of control aligns perfectly with what I call the reload zone, and I got my entry trigger and everything, so it's looking good. I'm making some money on this one. Very
Happened
nice.
with Tom the other day, where he was long pound Swiss, and my USD CHF wasn't really doing anything, but because of that, obviously I just let it go. I saw obviously his was pushing up and mine was just lagging behind a little bit, so that obviously gave me a little bit of confidence that the move was going to come as well. So fair enough. What about future?
Guess what?
What were we talking about? What?
No. Guess what? I have an entry order block right there as well. So it's
oh wow!
There you go.
Doubling down.
So 10%. Right 10%. Everybody's profits. You got to give 10% to Anastasiia. There you go.
Guys, by the way, I think someone wrote that there's only a few members left till you hit the target of the giveaway. So get into the Telegram, hit the link in the description below, get into the Telegram, and you'll soon hit that target for that giveaway of a 5ers account.
Yeah, we do have 242, so I guess it's gonna be still today.
Yeah, fair enough.
Nice.
When obviously before we go, because we've got like 5 minutes before we have a little bit of a break, but what is your projection now? Where are you looking for your growth in the 5ers? I know you've got other firms, we're not going to talk about them here, but your growth in the 5ers, what are you looking for? How are you planning towards getting to that last level, or even to the next level?
Well, I'm gonna tell you honestly, and that's not because we're live here.
Oh
but
God, over leveraging! I can hear it right now. Full margin.
All in.
Oh, that's it.
I mean, 5ers was actually one of the best experience with prop firms ever. Like the support, how quick the response is always, that they, you guys don't keep trading just hanging without an answer when they have questions. Never have any problems technically, never issue. It was just amazing. So I'm actually looking forward to the growth within 5ers, and I'm looking forward to go all in and scale this account up to as maximum as it gets on high stakes. So I've looked at the program before I started, and I was like, yeah, that's it. Well, that's really cool.
Good stuff. Happy to hear that. Has anybody got any questions before we go? Obviously, on to a 10-minute break. A 10-minute break. Anybody?
Sure. Anastasiia, besides these indicators or this method, this approach that you have, do you use any fundamental analysis? Is it all technical?
Yeah. No, I do use macro sometimes. Well, not my full analysis is based on the macro, but it is. I take this into account. For example, CPI, PPI, which is gonna be released tomorrow. So mainly everything around inflation, interest rates, and the FOMC meetings and Fed speaking. So all of this. But to be quite honest with you, I found out that with my trading method within volume, news just speed up the delivery of my price to the target.
Okay.
So it kind of works together, to be honest.
And how do you, what does it mean when you, let's say tomorrow we have some high impact news? Does that mean you filter those days, you trade differently, you trade after the news, or do you have a bias on the news, which way it's going to go?
I have a bias ahead of time. There are some news that I don't trade. For example, NFP I trade only afterwards because it's dead before anyway, so there is nothing to do there in the market anyways. Okay. Regarding, for example, CPIs and PPIs, I do cut the risk twice when I go in a trade before the high impact news like this. So I can get in the trade if I see the entry which is going to be along with my bias for the news. but I'm gonna cut the risk because the slippage can take into account and all of this kind of things can happen. So
Yeah,
it's not only about the stop loss, it's just
exactly, because of the increased volatility.
Yeah, exactly.
Perfect.
Right.
Guys, obviously we're going to go on a 10-minute break. Anastasiia, do you want to just tell them a little bit where they can find you? Obviously the links are all in the description, Telegram, Instagram, all of that stuff.
Yeah, the links are in the description, so they can find me there as well. I do look forward to growing the Telegram and to sharing a lot of different tips and regarding the trading and the market analysis ahead of time as well. Since I've had some experience with that as well up until that point, and also some like psychological, some podcasts with other traders. So it's going to be really, really cool. So I would really love to see more people joining and getting some value on this Telegram channel, which is in the description below.
Fantastic. Awesome. Well, thank you a lot for joining us here today. I obviously, from reading the comments, people really like the way that you described your strategy here and the content. So thank you a lot for coming on here. And guys, we'll be taking a 10-minute break, and then we'll be back. Me, probably Alex as well, and Victor, and we're going to be doing some live trading and also take a look at that GBP USD trade. All right, guys, see you in 10.
Bye.
Bye-bye.
All right, what's up, muted Mr. Alex? How's it going?
Here we go. Here we go.
There you go. Oh, that was interesting. Seriously, that was actually quite good.
Yes, I liked it a lot. She mentioned some very good points. She made some very good points, some pearls of knowledge. I like, for example, she insisted the first thing she mentioned that made her or advice she can give new traders is the fact of the necessity or the importance of having data. Right? She mentioned many times how important it is to backtest. And that's something we, that resonates with what we have been saying a lot, because that's how it is. But she mentioned other things as well, like trading less pairs, not jumping from one pair to the other one. I think that's a golden advice as well. So I liked it a lot. I think she had a lot of good points made for traders.
Definitely.
Yeah.
Definitely.
I guess you wanted to show something here, Alex. Otherwise, I have something to show.
We can just go through, obviously, a little bit about the trades that we've been taking over the last couple of days, what we're looking at now, any particular trades that we want to take, so on and so forth. I see that you're playing around with the volume profile. That's it.
Yes, I did add the volume profile, the fixed range volume profile. Why can I not put it lower here? Let's do that again. So I go into indicators. Actually, it's going to be down here. I have it.
Got a tool. Yeah, you've got the tool.
Yeah, I have it right here. So I'm actually going to place it all the way down here. So I view this as one move, right? That's like the breakout move. So I'm going to place it from that wick up to that wick right there. What I like to do when I use the volume profile tool is I'd like to, first of all, I extend it to make sure that it's actually where I want it to be. So at 300 right now is where I have my that wick right there, the current candle. And I want to go to style, and I want to put the row size at 70. That just makes it look better. And then you have the red line, which is the point of control. Now, interestingly enough, when you have the point of control right here, I'm going to remove some levels here as well. That's the price structure that we're looking at right now. And what I see here is I see from that high to this low is one move, and it's very clear if I go into the lower time frames as well. So what I'm going to do is I'm going to fib from that high to that low, extend it to the right. Now what you're going to see is a perfect confluence, almost perfect confluence with the 0.618 and the point of control. Also, we can add the fib up here, and we can add a fib right here, and we can add the 50, and that's the middle line right there. That's also the 50. So you got the 50% of this move from that right here in the reload zone of the fib from that high to that low, which gives us a really good confluence. And where this is confluent with Anastasia's analysis is the fact that the point of control is very, very close to the 0.618. And then this candle right here was, I looked at this and I said, you know what? This is my confirmation. There's a lot of confluence up here. There's a lot of selling pressure as well. And then we have that 1 hour bearish candle, sort of like a pin bar. And it's also engulfing the previous candle, showing a lot of selling pressure. So that's my trade right there. Just looking for a small move to the downside. Basically, this 50-minute break, I'm just looking for the 50-minute range to break to the downside. And I'm expecting, if we do get a break to the downside, I'm expecting a move down to that level, but I'm going to exit much earlier. Now, of course, because of the fact that this is not, a perfect example of the way I'm trading, I did enter this with far lower risk than usual. And if I'm going to be honest with you guys, if it's not the exact way that I'm trading, I probably shouldn't have taken this trade, but kind of like it. And while we're on,
but you did anyways.
Subject, yeah, I did anyway. So while we're on the subject, my biggest problem in trading is impulsiveness. Okay, impulsiveness. This is an impulsive
not necessarily
decision.
a bad. Being impulsive, in my opinion, is not exactly bad. I'm quite impulsive as well, and it can work in your favor depending on the way that you trade. So it's not exactly.
I guess if you're very smart, you can make smart, impulsive decisions, right? But if you're like me, a bit dumb at times, you'll make a bad decision on impulse. That's is this what it is?
I think you. Yeah, I think you have to. If you're very impulsive and you have difficult holding back those impulses, you should not be trading a system which is very, very selective, because such a system needs for everything to line up, and you will not be able to do that, and you will be taking half or almost signals, and that's not the system. So you'll have to choose a system that allows for not so selective entries, and then it should be okay. I mean, impulsiveness is not necessarily, of course, if it's in the extremes, it is a problem, but it's not necessarily, it's just a characteristic of how you trade. It's not necessarily bad.
I personally took a long there, and the reason why
is let me see that one.
This was an impulsive, because I didn't wait for any kind of retest. I was looking up, obviously, this has been support. You got the weekly open right here, or the weekly close. Sorry, last week's.
Oh my
close.
god, you got your TP right where I had my stop loss, dude. God damn it! Like right? Can you pull up? Like what's the number? What's the number of your TP?
Of my TP is
what's your actual figure?
28190.
No,
28187.
Okay, 28021 is my stop loss. No, my stop loss is 28162.
Yeah, I can only trade what I see, and at the moment I see, we got all this consolidation. We've taken out pretty much all of the lows from the start of the week. You've got this high on Monday. You've got Tuesday that's only taken one side of Monday's range out, and I'm just going off the statistics, the stuff that I keep telling you and talking about it all the time. But I took this year's worth of data on EU, even though it's not EU, it's GU. But Tuesday took one side of the range, and normally Wednesday would go to try and take the other side of the range. Now I doubt right now that this is going to come up 36, 37 pips and take out the high. I don't think so, but it's got a possibility that it will come out to take these highs here. Now my stop loss is quite tight. It's 4 pips away, which is super tight.
That's quite tight. Yeah,
that is super tight. No, it's not. It's 8 pips away. What am I talking about? I'm doing it from that price. 8
and we have news coming up
and 40 minutes.
Oh really? Oh,
yes, that's Paul testifying.
What a great time to trade. And to be honest, you have got obviously this area as well where the 50 fib that potentially could come down to. Probably not the best entry, but there you go.
I need to get out of this trade.
Maybe I can show my GU.
I need to get out of this position because we got Powell speaking in 40 minutes.
Trade. How much have you got on it? 0.5%.
Yeah.
Yeah, so they secretly got like 2% on there.
Yeah, well, it's still, I don't like. I feel like the edge is not. The edge is not in my favor.
Do you know why? Do you know why the edge is not there? Because you went off a hunch from another trader.
Oh yeah, of course.
So that's all.
That's why I want to close it. I'm gonna get out of this trade.
I'm looking at something. I'm always looking for. Let me show you my GU trades, and I'm looking for a short. I don't have a signal yet, but I'm looking for a short, and these are the reasons why I'm looking at that. One of the things is, of course, I like to always look for the higher macro levels to see that possibility. I don't always trade in the same direction that it is on the macro, but I want to know because I want to have that possibility that if it starts having bigger time frames, like 4 hourly, daily time frames, order flow in my direction, that I can hold that trade for longer. So what I see is we are coming back into a weekly supply area, and yesterday we closed as a bearish engulfing, forming a order block. And what do we do today? We went back into this order block, or we are currently retesting this order block. So what I'm expecting is that this order block, either today or tomorrow, will have some kind of exert some kind of pressure for price going lower. That's what I'm expecting, either today or tomorrow, based on the fact that it formed that's a sign that the sellers took control. So I'm looking for that, and that already has my attention, because if we're in a weekly and we are forming daily, and the 4 hourly also gives me entry, or the lower time from the hourly gives me entry, I can hold this potentially for much lower, more than just intraday. And if I go to the lower time frames, let's say the H4, I do have a fresh order block here. I will take all these away. We have that order block that we left, and we're coming right into it, right? And it's fresh. So that is one thing. So we have the fresh H4 order block, which sits neatly in that daily order block. And we don't have a quasi yet, since my quasi neckline is all the way much lower, way lower because of my rules. But if we go to the lower time frames to get some more confluence, I see a quasi, right? A nice quasi. Let me see. It's like so, right? And that's the head. Left shoulder, it breaks that neckline, goes lower, and this is I shouldn't put that there. Let me put this like so. This is the move that I'm looking. Let me move that around. That's the move that I want to see. I want to see after the neckline, the lowest point it makes, and right now we're looking for that. We're testing. Let me move that around. We're testing, yes, like this. So we're coming back after the neckline for that right shoulder. And what I want to see is where is market, if it is going to reverse from this area, where is it going to reverse from? And I can find a couple of order blocks that have been, overlapping each other, but I take only the last one. That's typically more relevant, better reaction to it. And it is inside that H4, which is of course because of the time frames, but that is a refinement. And if I measure this, I have about 15 pips, and that's good enough for GU. So that's my setup. I don't have a signal yet. Then I go to the lower time frames, and in this area, I want to see, because the market is fractal, I want to see a reversal pattern. I want to see it going, making that same type of quasi, making that right shoulder and moving away. And I'm going to be entering when it does, the right shoulder. It hasn't done that yet. So, but I'm looking for a short, and it is at not the right place, but the same place that Anastasiia was looking for, that point of control she mentioned using that volume profile. And it's the same with your, what is it? The reload zone. So it's, I think it's a great area.
Yeah, I got my TP right below entry. Just waiting to, hoping to get back those commissions, Yep.
Okay.
Right, just trying to get out of break even. I am, yesterday I made a, yeah, okay. You're lagging a bit. Maybe it's me. I don't know. Go ahead.
No, I don't know. But what I wanted to say was that the Alex setup can still work, because the fact that this is the area that I want to see the reversal from doesn't mean it can wick out of it. It can. So it could do easily something like this, and I will still take it. So we can both be right, Alex, and if I have a signal, I don't have one yet. If we have one, we can still both be right. He'll get his TP, and market may reverse from a higher place. But we'll have to see how it goes. I don't have a signal yet, as I said. So to me, this is the area, this overlapping H1 and H4. This is the area where the bears should defend their turf, and if they don't, everything switches back to bullish again. And so that's why it's important to me.
Yeah, yesterday I made a really good decision. I think I looked at a couple of trades on Monday. And they started activating on Tuesday, and they were really good trades, right? You have one on NCD CAD and then one on USD CHF, and I remember looking at the chart and thinking like, this is a really good setup. And I start calculating the position size, and I start putting in the orders, and then I'm checking the news calendar, right? And there's a high impact news event coming up for NCD at 4 in the morning, and I'm like, oh, you know what? Should I risk it? I'm really thinking like, maybe I should risk it because this is the perfect trade. This is the perfect setup. And I didn't, And a lot of times I would take the trade anyway. And I think that's one of my biggest problems, right? I take the trade anyway when seeing that maybe I shouldn't, maybe, I got major news events, or there's one indicator telling me that I shouldn't be taking trade, but I take it anyway. So yesterday I didn't take the trade, and it would result in a big, big loss. And the same thing for USD CHF. So I feel like for me, I need to get back, and we talked about this yesterday as well. I need to go back and start making rules for myself on the number of trades that I do take in a day. And I found that 1 to 2 trades, no more than 1 to 2 trades. If I take 1 trade, and that's a good trade, I should be happy for following my plan for that day.
I've got something to add to this. It's funny because when I was on the dating scene, and I was using something like Tinder for, the app Tinder. And the more I would add to the profile, the less matches I actually got. So at the start, I had loads of different pictures. I added my height.
I thought you were going to say something different.
I added all the...
1 to 2 a day, no more than that.
I added all the I like,
beautiful.
the food, my interests, all of that stuff, and I got a decent amount of likes, and I went on a few dates, and then I decided, you know what,
dude, we all know you got tons of dates on Tinder. You're looking so good, Alex. We all know that baby face, Alex.
Okay. Instead, what I did, I was like, okay, I'm going to test something. I'm going to do an A/B test. I closed that one. I did another profile. This time, I only had a few pictures. I only put
did you test?
Yeah, of course I tested.
Did some fucking backtesting on Tinder. That's amazing. That's
traders,
amazing.
We're doing all kinds of weird stuff. Anyway,
do you have a spreadsheet as well?
Definitely not a spreadsheet. But the fact that I put only less photos, I put 4 photos. I didn't put my height. I didn't put my interest. Obviously, I mentioned I'm English because you know what, English people, it does work. And just by putting not a lot of stuff there, eliminating things out of my profile actually gave me better results. And that's what I'm trying to get at. Eliminating stuff from your trading, certain days where you shouldn't be trading, certain times, certain news, certain indicators that might be confusing you might actually give you better results. It's all about eliminating things and making things simpler. And I promise you get a better win rate. Because for me on Tinder, once I did that, my win rate was 1,000%.
But the losses were huge, right?
But, at the end of the day, that it is something to really think about. Is if you're clamming your strategy with too much, you're thinking about too many things, start eliminating things to free up that mind space, and I promise you'll see better.
I think there's a lot of value. There's a lot of value to that. I think I completely agree, and it's not only in Tinder. I don't have experience with Tinder, but it is in other sites, other aspects of life as well. A lot of the times, of course, it depends on what is less, right? Less focus is not always good, but a lot of times less is more. By being simple, you can focus more on the most important things, and that works in a lot of aspects, not only in trading, but of course, Tinder as well, as your experience attests to that. But there's another thing, I think, although I don't know how this relates to trading, but perhaps the last photos and whatever you had the first time on Tinder, the reason you had better hits is because if you put, I suppose if you put a lot of things, it may come over as, wanting too much, right?
I don't think so. I think whenever somebody is looking at something, they're not looking at what it is. They're looking at the things that they then use to eliminate the person. So if you're looking at a profile, you can read so many good things, but if you read one thing that you don't like, that eliminates your chances. So all you need to do is obviously removing more aspects that could eliminate you from that pick. For instance, I'm talking about obviously this specifically, but the same thing is with your trading. At the end of the day, when you're looking at a certain trade, and you've got the RSI, you've got this, you've got the EMAs, you've got all of these different things, and it's preventing you from making a decision. Once you start eliminating things out of there, then it will give less thing. You know what I'm trying to say. kind of making a dog's dinner of this at the moment. But there is eliminating stuff is always good.
Yeah, I understand. I think the point is when you eliminate stuff, what you're doing is you're reducing things that could be a risk. In the case of hitting someone choosing you, it is something that triggers them not to want to like.
Okay, what happened with GBP USD? What's going on here?
I told you I'm coming for your stop loss, boy.
Oh god damn it! What's going on here? That's a massive move right there.
That is a massive move. Yep. And we don't see it on EU. So it is something on
market basically opening. I think just US market opening, but now it's going into a big place of resistance. So maybe.
But it's not on EU, so it's not a dollar move.
Oh really?
No, it's not. So it's a pound move, something related to the pound.
I can see what's going on here.
I was going against Jonathan, and they were like, you know what? Let's pump the price for this, guys. We're gonna have to. Oh, okay, too late.
Okay, Bank of England is actually talking. Some guy from Bank of England doing something, which which means why is that not on?
Because maybe
is that not on the trading? I mean, there's a speech from Bank of England. Someone from Bank of England, right, has a speech, and it's not on Forex Factory.
A viewer.
Weird.
Let's check it.
But I bet you gold as well is going up as well. Let's have a look. No,
it's on
this is a pound move then. Definitely.
Yeah, it is a pound move. On MyFX, there is that it's a medium impact, but it started 3 minutes ago, which is exactly when the move started. So it is the speech probably that is moving the pound.
Let me just talk about gold because I think I'm going to do a challenge, a new 5ers 100k high stakes account just on gold. So I'm starting to get into the rhythm with gold. I'm starting to like it. Obviously, I still need to get used to the way that. Hold on a second. We've got a lot of people here.
Yeah, so he's going to start his challenge.
Sorry about that. So, challenge. I lost train of thought now. That's it. Done.
You're going to start a new challenge.
You're starting a new challenge on gold.
Yeah. So we're going to do that, but got to get used to obviously these moves with gold because they are quite volatile and they could scare me out of the market. So for instance, yesterday, I posted in our little WhatsApp chat. We've got a little signals chat for us four in the WhatsApp, and we posted this move.
100% win rate, 30% of the time.
We were looking for obviously price to actually push down, take out these lows. Now the reason why I took that, I actually used the bar chart. I actually looked at this ascending channel with divergence coming up here. This was the trigger. Obviously, we had the divergence on the stochastic RSI, and I actually took the trade here. Now during the day, I was doing something that I don't normally do, and it's trailing my stop.
You say that so often. It's very.
I know. I was trailing my stop, and as soon as price came up to here, I was like, "No, you know what? I'm getting out." I actually got out, and I thought, fine, I did the right thing, but clearly just leaving it, set and forget is the best thing to do. I came into the office today. We sent another signal into the group. Nobody took it. Jonathan, did you take the signal?
I did not take it.
You did not. Well, that's your own fault then.
Yeah.
So we had, obviously consolidation, push up, break, retest. So we've got that one, and we had another one here. And the take profit was actually here. I did take profit, just a couple more points down actually on this candle here. But that were those were the moves on gold, and not on this account, on another account. But that's it. That's what we're going to do. I don't know who else wants to do a challenge with me on gold, just on high stakes, but
no way.
Nice, Fernando. Look at Fernando taking the gold trade long.
Nice. No, I think,
Wow.
man, I'm done with gold. I'm just done with gold, and it looks like I'm
Very
done
strong move.
with pound as well.
Do you know? I was like, oh, it's not gonna come and take out the high on Monday, but maybe it will take out the high on Monday after all. That would be crazy, wouldn't it?
That's a big move. It's a very big move.
It's still got quite a lot to go for that.
It definitely looks like it wants to go for that high, that Monday high. But this move is only about 8 minutes old, so it's very strong.
What are they
a lot of
saying? They're probably saying obviously they're not going to cut rates or something. I haven't got a clue what they're saying.
You can see also the 5 minute candle is it doesn't have almost any wicks on it, so it means that it's really one-sided, the move.
Yeah,
we got
very strong.
M76BB has been asking about Bitcoin, and so I've been reading your comments, and I'd say that if you're used to trading gold, and if you're used to trading gold, then I feel like I'm not trading Bitcoin. I'm mostly investing in Bitcoin, and I'm only taking swing trades on Bitcoin when the setup is perfect, which is very, very seldom. But the difference between gold and Bitcoin, or the similarities, I would say, is
very similar.
They seem very similar. So if you're if you're used to trading gold, then I'd say give Bitcoin a shot. But of course, do some back testing and maybe some demo trading for at least a week before you go into live markets if it's completely new. I'm staying away from Bitcoin for the same way as I'm staying away from gold. With that said, gold is my biggest investment. With all the different investments that I have, I'm very, very into crypto and Bitcoin, but I'm not actively trading Bitcoin because it has this idea that it's just, whatever you think that Bitcoin is not going to do, like the impossible scenario, it's rather high likelihood that it's going to happen.
It's one of those
don't you take the reverse signal?
Yeah, it's one of those assets that really, wants to entice
liquidate everyone.
One thing, it wants to entice traders to get people involved, and then it just likes to turn. And then when it turns, everybody capitulates, and then it starts pushing up further because further up or further down, depending, because everybody capitulates on the move that they were enticed on because they got it wrong. And I've been on the wrong side. I've been on the right side sometimes. But honestly, if you're going to do it, then definitely take that into account. Where people are putting their stops, big orders. You can even use, obviously, footprint charts. I used to use footprint charts for crypto futures, like Anastasiia. That's why I had a little bit of experience with it. And they can tell you where there's orders sitting. It can tell you, obviously, where buyers are coming in. It can tell you how many people are short and how many people are long, and that can really help. Because if price, is coming down here and you see all these wicks of loads of candles, loads of people going short, but price is still not breaking down, and then it starts pushing up, well, you've got a lot of traders then suddenly are offside. And if loads of orders are getting absorbed, loads of short orders are getting absorbed, and the price is still going up, that means they're big buyers waiting and absorbing the price. So there is loads of different things that you can look at. And to be honest, it actually looks like a long from here, to be honest. The break of this kind of range, it's broken up above here, and now it's retesting back down to one of Victor's order blocks. I wouldn't be surprised if it comes to hit this 200 EMA on the that's a 4-hour chart. Oh, that's same thing.
Just so you guys know, the WhatsApp group that we're sometimes referring to is not it's not like a group like that. It's just a group within the company and the team that's working on the
don't give
room.
Jonathan any ideas, okay?
Yeah.
No, we have a group for the content and everything, and everybody throws little ideas around.
Yes.
But that's me. If anybody, I think Bitcoin's a long, but that's
and I got the craziest thunderstorm going on right outside the window.
Yo, USD.
Is it at the beginning of, or is it almost over?
Crazy.
I think it's been going on for like 2 hours now. I think it's getting closer.
The move on USD CHF. This is the kind of bread, and anybody can actually take this, because I've used this, throughout the, every time you see me trading, you pretty much see me trading this pattern. If anybody wants to just get a simple trading pattern that they can see, this is really it. You see double bottoms, just consolidation, the break about the consolidation, hitting the EMAs, push up to the 200 EMA on the 15-minute. That was another trade that was taken the other day. Super simple. But there you go. What are you guys looking at? Do you guys want to throw around a couple of charts?
Yeah, let me go through.
Okay, go ahead.
Yeah, okay. So I got, what I'm watching is right now I got gold. I'm watching, potential long on gold. I wanted to see it come down here. So what's frustrating about gold is, we've been looking at the we've been looking at gold almost every live stream, and I've talked about, I remember even in the beginning of June, I talked about, how I wanted to see a break above this level, a break and retest, and then we came down, and I saw, well, we got rejection here. It's still a very strong level, and the more retests you have, the weaker the level will become, and also the stronger it will become at support. So every test is a good, right? And I also, a lot of times I say, never trust the fourth retest, right? Never trust the fourth retest, because that's a lot of times going to be the break. So you got the breakdown, 1 retest, 2 retests, 3 retests, and then of course on the 4th retest you have that breakout. So I've been actually planning and looking at this trade for a long time, and going into the 4 hour, adding my fibs here. It's not really the perfect move, but it's from this low to that high. You see the relapse zone, and I got stopped out. I had the most terrible trade on gold. I took this trade, right, and I had my stops like in that area.
Can I just say something
again? I know that you told me that I shouldn't.
We were just gonna go.
Yeah.
Told you so. Told you so.
We're not muted, but
the sound.
Okay, the music. Okay, so that was a bad trade, and I got really pissed on that, because it's just yeah, whatever. But what we have right now is we actually have a 4 hour W inside this area, and this is the correct type of trade for me. Now, I would love to see gold retest this level later today or tomorrow. This would then be a break and retest of the neckline of the W that's created inside the reload zone. It's a picture perfect trade for me. And the way I would trade is wait for that retest, enter around that area, stop loss. Probably I will probably put my stop loss somewhere down here, and then TP at the highs for a 1 hour trade. But if you're looking at the higher time frames, a target, that's also going to be a target up towards the range highs, because now we have reclaimed range EQ, and we're potentially going up to the range high area, and this is kind of like front running that level. But this is a trade I'm looking at. Am I going to get an entry? Probably not, probably not. But if I do get an alert here, I'm going to set an alert. If I do get an alert, that's a trade for me. Other than that, I am watching a few charts here. I'm not going to look at that one. USD CHF was a trade that I tried earlier today. I did get some profits out of this one on that move lower. But this was actually one of the trades that I wanted to enter yesterday, but I didn't. And the reason for that is, if you look at the weekly, you have a really good bounce here at its support level and a weekly bullish pin bar. And then if you go to the daily, you could definitely say that this is a, if this is a high and that's a low, then this is a higher high and the higher low. So I'm watching this as an uptrend. So weekly is bullish, daily is bullish, but the 4 hour gave us a very, very good signal right here. And I talked about this with Victor yesterday. When you have a trade setup that's aligning with the 4 hour, but it's against the daily and the weekly, the best course of action is probably not to take the trade, because you want to see every time frame that you care about align. That's where you get the best trades. Like with gold, if you look at gold on the weekly, super bullish on the weekly. Daily, super bullish. Even though it's in a range, it still has bullish characteristics. The 4-hour trend, insanely bullish. The 1 hour, very bullish. The 15-minute bullish. The 5 minute is bullish, and even the 1 minute is bullish. All time frames on gold is bullish, and I'm not long. That's my problem today. What are you watching, Victor?
No, what I wanted to show was the GU move, right? This is the area that I identified according to the the reversal pattern on the higher time frames, and the overlapping of different order blocks that give me a higher win rate or higher probability of identifying the correct order block that's going to reverse price. However, I do wait for the confirmation. To me, confirmation is very, very crucial. If I do not get the confirmation, a reversal pattern on the lower time frame, I have nothing to do. And I think this move, even though because it wasn't high impact, I wasn't aware that there was this news coming up. But even if there wasn't a news, I would have acted the same. I mean, if it's high impact news, I would have probably waited for the entry, of course, depending on how impactful that is deemed to be. But what I want to say is that in here we had the reversal pattern, right? That I was waiting to do to catch, and it never showed, right? And that's to me, I only go, right? It never broke that 5 minute. This is the head, and that automatically makes this then either this or the one below that, depending on your rules, where the neckline is, and it needs to break that neckline, needs to break that structure for me to start to think maybe this will reverse from here. And it never did that. And that's why I don't enter blindly. I wait for the lower time frames to, switch, because price will not start going lower if the lower time frames do not, break structure and start going lower, right? And if I don't see that, then my conclusion is it's probably not going to go yet. It's probably going to go higher, or maybe it's not going to reverse at all. And this move, of course, changed the price action completely. And if it is going to close, this candle is 11 minutes from closing. Likely it's going to close outside of this H1 order block. And if it would do that, then it would invalidate this order block, and then my setup starts to crumble. But already we can see that this wick, this is way too big. So I'm not interested in this setup anymore. To me, it's probably going to be invalidated going forward. But that's the importance of confirmation. I don't know if it's for other strategies and system as important. I guess it's not always that important, but for me, and perhaps for a lot of others, confirmation makes a big difference in your win rate in the trades you take, because that's the final thing that needs to happen before you enter. And that's maybe something that could help also with impulsiveness, if you have a rule where the confirmation exactly comes from, because unless you get that, you're not going to be entering. And if I show EU, this is also interesting. We didn't have, in comparison to GU, we didn't have that outside bar. I mean, the engulfing this daily order block. What we do have, so in terms of the daily, I'm still thinking that it wants to go to the weekly order block and the daily order blocks, right? So it is on its way, leaving a daily, leaving a weekly, going to the same time frame, just in the opposite direction, going from one station to the other. But it can do a lot of things in between. It doesn't have to go there in a straight line. Usually it doesn't go there in a straight line. So the daily is not over yet, even though I think we might be getting in about, I don't know, what is that, 70 pips from higher from current price. We could be looking for a reversal on higher time frames. But if we look at the H4, we did get a bearish order flow that started. I'm going to take these off, right? We have that engulfing there, another engulfing, and so far the last bearish engulfing that is the basis of that bearish order flow has not been negated yet. So even though we have bullish order flow since last night, right? Those bullish order blocks being formed, we have not taken that bearish, the last line in the sand, or actually it's the first one. But if you break this, then it shows to me, or at least it tells me, that the market participant, the sentiment has completely changed. We're back into bullish, and it's breaking bearish structures, and it hasn't done that yet. So I had that as an area, right? I think I mentioned that. That's the area that needs to be defended if this bearish order flow that started from that top is going to continue, right? If it doesn't respect that, then the setup is equally invalidated. So we have the H4, and I go to the H1. This is what I just mentioned, that I want to see price react, reverse from those yellow vertical lines, right? Which is a refinement of the H4, H2, H1 order block, right? And that's how, look at how market reacted to that order block. It doesn't do that all the time, of course. A point in case GU, what you need to do is go to the lower time frames and look for that reversal pattern on the on the minutes. At least that's how I trade. That's what I wanted to show. But I think this is a beautiful reaction to that area that I identified, or I shown in advance. I think it's a very nice, very tight area that I like, because it's only 1.5 pips wide. Maybe a little more than that, but it's certainly less than 2 pips wide. So you can have a very nice, tight stop loss with these kind of trades, if it gives you those confirmation on the lower time frame as well. That's for me.
Gold, I think, is on the way to taking like the highs on Monday. I think it is absolutely smashing.
Yeah, that is.
Yeah,
it is.
Yeah.
Do you know what though? Once it's so technical. The pattern, it's got beautiful patterns. When it goes, it really does follow some really beautiful patterns.
It does.
When it ranges,
yeah.
When it ranges, you're looking at like a churning your account if you're on the lower time frames. I don't know why I've still got them on here, but I've actually on another account I've taken off everything except for the 15, 1 hour, 4 hour daily. Got rid of the 1 minute. 1 minute, if I'm in a range and I'm just focusing and I'm on the 1 minute, I'm getting too many signals and I've eaten up so many profits like that. I've just finally had enough. I've just got rid of it. I can still get into good position on a 15 minute and still can get the precision without going into the 1 minute. 1 minute is just, it's a love and hate relationship.
Yeah, I mean, the only reason I had the 1 minute on here on TradingView is just because I can show price action during these live streams. I would never trade based on the 1 minute. It's too much information.
Yeah, I think it's information overload. I try not to. I have one of my habits is I do not want to even open the 1 minute unless I have a setup with everything falling into place. Then I go to the 1 minute, because if I start, let's say, the day and I'm glancing over the 1 minute, I see all kinds of patterns and I want to be part of it. So I need to have it closed and only open it when price comes back, and I need that last confirmation reversal or confirmation signal to get into the trade. But go ahead.
Carry on, mate.
No, what I want to show is the fact that I use outside bars as for the order blocks and not only engulfings is for this reason. I've seen that so many times that the order block is not only engulfing, but also it can also be outside bars, like in this case. And we can see how neatly price formed that engulfing, comes back, retests it, and eventually moves away from it. It's a very beautiful example of the reaction that we can expect from order blocks. Very simple, extremely simple.
Guys, we are getting close to 2 hours. Unless you have something specific you want to talk about a show, if you guys have any questions,
watch the news come out, and then we'll finish up.
Actually,
sometimes I look at your charts and I'm like, oh, we got a question. What account size do you recommend for folks?
No. I mean, we have. Let's see. I have a question I've been saving for some time. Let's see if I have it some here.
I think you're referring to the questions on Discord, right?
Nice.
Yes. I got it on my screen.
Nice.
Let's see. Joe, our good friend Joe, asks, sometimes I struggle at determining where my stop loss should be. I have somewhat come to terms that I use a slightly lower price on previous resistance for my take profit, but stop loss is tricky because price may wick if you place it at a support. Can you perhaps tell me the optimal way? Where do I set my stop loss?
Put it under support.
Correct. Smart.
There you go.
Correct. Yeah, that is. Jonathan, like, you have a.
Honestly, though, on a serious level, one thing that you could do is put it not below a last swing point. You can put it 2 swing points before, or you just can think about, if you were a retail trader, where would you put your stops, and put it above that place.
So I always teach, have a wide stop loss. And what I did when I had these problems, because in the beginning I had the exact same problem. I put in orders, stop loss, my stop loss get hit, and then moved to TP. So what I did was I put in my TP, I put in my stop loss where I thought the stop loss should be technically, and then I increased it some more, and then I increased it even some more. Okay, that could turn a 4R setup into a 1R setup, right? But so basically what I did was I had one stop loss, and then I increased it a little bit, and then increased it even more, so it became almost 3 times as big as the original stop loss. And I did that every time, and I got used to just having a ridiculously wide stop loss. And sometimes that's what you need, because the wicks that takes out the stop loss, you'll be surprised how far down that stop loss, that wick can go. So that's just my advice. Have a wide stop loss, and sometimes the stop loss should be as wide. It's almost ridiculous. You're going to look at that and like, why are you having that big of a stop loss? And I think that's your starting point. And then but if you're swing trading, maybe a 60, 70 pip stop loss is not out of the ordinary. Even 100 pip stop loss is not something weird when you're like swing trading, right? So I think that should be your starting point. Have a ridiculously wide stop loss, and then lower it, make it tighter with time as you see price, how price moves.
To add to what you've just said, is if you start off with a large, an abnormally large stop loss for the asset that you're on or the time frame that you're on, and you get a sample of trades, you get a big sample of trades, then you can find out the average of those trades, how much your trade or your strategy goes into drawdown before it actually goes into profit and to your take profit. Let's say out of 100 trades, you've seen 60% of the time it goes into 30 pips drawdown before it actually finds support and then goes up. If you've got your stop loss at 100 pips, well, then you can start bringing it in more to, let's say, 35 to 40 pips. And that's a long way of doing it, to be honest. It's going to take you a long time, and it's very tedious. You can probably do it better if you're going on FX replay and just trading this and back testing it. But putting a stop behind an area where you wouldn't want price to come back to is just normally the best place. If you think, okay, you've got a friend, where would he put his stop? Put your stop before or after his, you know? So that's what I can recommend.
Yeah, I think I can add a few points to that. Let me see. If we go, for example, to today's setup, the general idea is, first of all, I think your stop loss should be where the setup is invalidated, right? Because you want to be in the trade as long as the setup is still has a good chance of working out. Let's see, when I have this quasi, which now already has an engulfing actually an outside bar, so that's a very, very nice reaction to that entry order block. But if I have this quasi and I have identified an area where it needs to do something based on a phenomena that I have been observing, right? Because that's why I'm trading it, because I see a pattern, right? Price does certain things in a certain way, in a certain sequence, the pattern, and I have an expectation. Okay, if price comes back into this area, I expect it to be rejected and continue lower. Well, if that is the case, then I need to define where does it invalidate this. And for example, in my case, it would be an hourly close above the H4, right? That would be my invalidation. If it closed on the hourly above H4, then I want to be there's nothing here anymore for me to trade. So that would invalidate it. That means that my stop loss should be beyond this area. So it doesn't make sense for me to have a stop loss that is, let's see, this is a stop loss. Let's see if I have a stop loss line. Yep, it doesn't make sense for me to put it in there, because all of this, it's still the setup is still valid. What I need to do is then have it beyond that area, and how much beyond that depends on the volatility of the pair, perhaps how long you're going to be in the what time frame you're trading, if it's going to be overnight or not. Different things that may depend, you need to factor in how far, how much margin you need from that point, right? Because sometimes, as you mentioned, sometimes it can wick, and it happens a lot. One thing that you could do to have an idea how much far is look at the ATR, right? The ATR, which gives you the range of the time frame you are on. That can give you an idea how typically, how volatile, how much does it range, it moves per each candle, and that gives you an idea. You can use perhaps one ATR or 2 times ATR beyond that area, depending on your time frame. That's one thing I could say. And the other thing is, it's what you mentioned, Alex, that you need data. In the end, you need data. So you need to go back and have your stop loss at different places and just measure how many of them get hit. If you had it at, let's say, 5 pips beyond that on one pair, not on every pair, because every pair has different volatility profile, but just one pair. If you have let's say you put it at 10 pips beyond that area, right, where it invalidates, do your back testing and see if that is right. Is it too much? Is it too little? Your data will be able to help you optimize if 10 pips is adequate, or you need to do it at 30 pips, perhaps. Whatever is, the data tells you that it's not likely to be hit when price does what it needs for you to get into the trade. That's what I can offer.
All right. With that, I think that's a perfect way to close today's live stream. Sorry about that sound. I'm getting some. Victor has been telling me not to move the mic because it's making weird sound, and I figured out that that's the sound that he's talking about. Yep, that's it. Okay, guys, this weekend we're uploading a video on the YouTube channel. I'm going to show you. It's just a quick, small video showing you how you can use AI to improve your trading. It's really cool, actually. What I've done is I've taken ChatGPT, I've transformed it into my own personal trading coach and mentor. I'm feeding the AI with all the information about my trading system, the way I'm trading, and the way I'm, the problems that I'm having, and then I can just ask it questions directly, and it will help me based on the information that I've given you. So, for example, I can say something like, I'm about to take a trade. And then the AI is going to repeat my pre-trade checklist. It's going to ask me if all the indicators are in confluent and which of the indicators and what they need to do and all that fun stuff. It's really, really cool. So make sure that you check out that video this weekend. All right. With that said, goodbye.
See you later.
See you next week. Take care.
See you next week. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.